What is up, you guys? So today I wanted to talk about a company that I think has been flying under the radar for quite some time, and it's just now starting to pick up some traction. This company is in the EV sector, but more specifically in the commercial EV sector. So it deals more along the lines of buses and delivery trucks as opposed to something like a Tesla that just deals with regular cars. Now, the company's name is Workhorse, and in 2020 they got really popular because they had a contract with USPS. And to make things a little more interesting in this particular niche of the market is that the demand for these type of vehicles is about 650,000. And the fact that their original contract with USPS was for about 150,000 shows that there's so much more potential to grow, and this company is truly one of the big dogs in this particular niche. The new administration has pushed really hard to be the leader in the EV sector. Even if they're trailing behind China, they're still trying to make an effort. So now, based on the information we have today, what is my price target? Well, in my opinion, I think this company could reach somewhere around the levels of 50. So high 40s, low 50s, somewhere around there. I'd be happy selling it at 48. Now, if you're not invested in this stock, there's probably two strategies you want to go about this. Strategy number one is buy it now and just ride out the ride because it could still be negative. Just remember that there is still speculation behind this, so it could be announced that USPS goes with a whole different company and this company ends up crashing. So just be aware of that. So the second strategy, and I think this is the smarter play, is buying it under 30. I think anything under 30 is a good deal. Anything in the low 20s is an amazing deal. Anything under that is like an unbelievable deal at this point. One thing that I want to warn you about, especially if you're thinking about just jumping in right now blindly, is know that you're probably gonna have to really stick it out for the bad times as well. Like, let me show you what the chart looks like for this company just one in the last 6 months. So you have it in the low 20s right there, hitting 15, going all the way up to 30, and then coming back down in November back to 15, going up and down countless times. So this is a company you're going to be invested for the next couple months, and you have to understand that with this particular company, there's a lot of volatility, and you might, if you buy now, you might end up seeing the stock go down to 25. So just be wary of that, and that's why I think that the better bargain would be buying it under 30. So if you plan on sticking it out, knowing that in your head, after doing your homework, that it ends up hitting 50 or 60 or 70, buying it now is a pretty cheap deal. But the way I've looked at it, buying it under 30 is probably the better deal. Buying it now doesn't make any sense, so it's not too far off. Right now it's at $34, so just either be patient or buy it now. But again, just do your own homework on it. This is just my opinion. And I think with that, we should be good. So anyways, that's my quick summary on Workhorse. If you have a stock that you've been looking at and you want my opinion on it, leave it in the comments below and I'll do my best to do some research on it. Probably be a good pick for me as well. So let's all help each other out, and I'll see you on the next video.